Bitcoin currently looks like it could be on the cusp of a euphoric phase of price action after an already strong bull market. However, has this cycle really been as impressive as the price chart shows us, or have we really been underperforming? So we'll get right into it with the Bitcoin growth since cycle lows chart we have here on BitcoinMagazinePro.com. Now, if you're just looking at the percentage returns of this cycle, judging from the cycle lows that we set in the tail end of our bear market, we can see as I film this, we've already had 634% returns, which isn't bad. This is a pretty strong bull market, not just in terms of price action, but in terms of fundamentals. We have institutional accumulation through the ETFs and Bitcoin treasury companies. And just looking at the on-chain data, we're still seeing a huge amount of long-term holders refusing to take profits. So as I said, we still could be on the cusp of this big run-up phase that we typically see at around this stage in a Bitcoin bull market, especially when comparing to the previous two cycles. But again, if we look at the percentage returns compared to the previous ones, we can see at this point in the previous cycle, we were at 1,230%, we'll say, and then that was the 2017 cycle, sorry, and then the previous cycle about 1,460%. So the two cycles compared, the previous two cycles, the most recent one was about 75% lower returns than the previous one at this stage of the cycle, whereas this cycle so far is less than half the returns we had of our previous cycle. So I know there's diminishing returns, that's to be expected. Potentially this cycle we're going to have a lengthening cycle and far outseed the typical 4 years that we see, and at that point maybe we won't have such diminishing returns. Maybe we're actually going to see something quite similar to the previous cycle, but again, this is speculation. We just need to focus on the data right now. So what I'm going to do is if we go to the TradingView chart here, what we can see, and I'm just going to move myself over here so it's a little bit clearer, this is the Bitcoin versus US dollar chart, and like I said, it doesn't look bad at all, especially if we focus on this current cycle. We've barely had any long, extending, deep retracements in the price action. The deepest we've had is, I believe, here when we first surpassed $100,000, came back down to about 74, 75K of around 32%, which compared to previous cycles is very good. So the fact that we're seeing diminishing volatility, potentially dampened upside potential, is maybe negated by the fact that we're not seeing such violent swings to the downside. And again, if you just look at the price action, we've had this big step up price action. We've had big explosive move, choppy consolidation, big explosive move, choppy consolidation, etc. And now we're close to new all-time highs. As you watch this, we've hopefully reached new all-time highs. I'm filming this a couple of days before you'll see it. And things generally look pretty positive, pretty strong. Like I said, it's not just from a price action perspective, but from a fundamental perspective as well. But if I actually zoom out, again, we're on the weekly chart here, and this is versus the US dollar. One thing we need to consider is the purchasing power of not just the US dollar, but other fiat currencies is constantly diminishing. So when we're actually valuing an asset, which is against a diminishing asset, then it makes sense that Bitcoin or any other assets versus the US dollar or fiat currencies are typically going to trend to the upside. Inflation is eating away, like I said, at the purchasing power of these currencies, and they're diminishing in terms of their strength. So if we measure Bitcoin rather than the US dollar or other fiat currencies against something like US tech stocks, then maybe we'll get a little bit of a better insight into how much Bitcoin is actually overall underperforming other more volatile, risk-on and speculative assets. So if I zoom back out here, we can see it's not quite as amazing, it's not quite as impressive if we measure Bitcoin versus these assets. If we actually look at the percentage gains compared to the 2017 to the 2021 peak, we can see it was only about 50% higher. And if we look at how much higher we've actually extended beyond that previous all-time high, we can see just barely. We've actually faced some resistance at this point, have actually climbed back above it now, and are now hopefully turning this level into support, so we can hopefully build a solid foundation and move higher and have a long and sustained period of outperformance versus US tech stocks. And another interesting thing as well is if we look at the previous cycle peaks, we can see where we had this double peak in the Bitcoin price action, where the Bitcoin price versus the US dollar actually slightly exceeded that previous price action peak. We can see when measuring versus other assets that people invest in, that we actually expect to see a little bit of a return in, that Bitcoin actually underperformed, potentially indicating that this second leg up we had was more driven by global liquidity expansion and again, diminishing fiat currency purchasing power rather than Bitcoin's actual outperformance in its own right. Something quite similar to what we saw in the 2017 cycle where we had this big peak and then a little bit of a dead cat bounce. Again, on the NASDAQ chart, it doesn't look quite as steep, but again, it looked quite similar where we had this. Of course, it was over a much shorter period of time. But again, this looks a little bit more typical of a Bitcoin cycle without this really weird double top that we had in the last one, where most metrics actually pointed towards us peaking at the first actual point of $60,000, $64,000-ish. And again, this is the NASDAQ. For something quite similar, a very correlated asset to Bitcoin. But if we look at Bitcoin versus potentially something that's a little bit more akin in terms of its fundamentals to Bitcoin in gold, where we actually have this narrative of Bitcoin being a digital gold, we get an even different story. So again, this is on the weekly chart here, where we had a very similar peak in the double top price action cycle. But again, if we scroll across, what we can see is if I just draw a line to where the current or previous all-time high was in the last cycle, we can see we're actually beneath this point in price action, which indicates that Bitcoin, if you were to buy Bitcoin in the 2021 cycle peak around 4 years ago and hold till today, you'd have actually underperformed compared to holding gold. Now, of course, if you compare the cycles, I mean, Bitcoin versus gold since the cycle lows has had over 300% returns. And of course, gold's been on this pretty historic bull market rally where it's seen huge gains to the upside. But looking at Bitcoin through a lens like this one maybe gives us a little bit more insight into the true purchasing power of Bitcoin as an asset. A few other interesting things to note is if we look at the COVID dump, again, that actually took us pretty much right around to where Bitcoin's price bottomed out in that 2018 bear market low. And again, if we look at the Bitcoin price action double top, they were pretty much identical. And now it's actually forming a little bit of a triple top. But we can actually take this one step further. What I've got here is the Bitcoin price versus gold, but taking into account the expansion in global liquidity. So not only are we comparing Bitcoin to the price action, price appreciation, or potentially diminishing returns of a hard asset like gold, but we're also excluding the global M2 money supply increase, which we've seen even in the past few months increase double-digit percentage to the upside. So if we actually zoom out here, we can see something potentially even more indicative of how the purchasing power of Bitcoin is increasing or decreasing over time. Now, again, this is pretty interesting to see because if we look at the bear cycle lows, they were almost exactly the same in terms of the price action. So even though this point in the Bitcoin price action in US dollar terms was significantly lower than around this 20K drop we had, if we actually look at them compared to the purchasing power of hard assets like gold, taking into account global liquidity, we can see that these were almost exactly at the same point. If we look at the double peak, again, we get this similar action to what we saw versus Bitcoin and the NASDAQ, where the second peak was actually lower than what we saw in the previous one. Again, reiterating the previous comment that maybe that second rally was driven more by global liquidity expansion and fiat currency debasement compared to actually Bitcoin outperforming. But again, if I actually draw on a point for the previous all-time high, we haven't made a new all-time high this cycle. So potentially this is why we've not seen a huge retail inflow yet, because in terms of actual comparisons to other hard assets, Bitcoin hasn't actually created a new high yet. We draw something around here. Again, we get some very clear and obvious support and resistance levels, which maybe give us some indication of where the Bitcoin price action could go. So even though we're close to new highs, in terms of the US dollar chart on Bitcoin, we're actually at a fairly notable point of resistance on this chart. And especially if we give ourselves another potential point of resistance around here, Bitcoin could be facing a fairly decent period or block of resistance where investors who are looking at these charts may be a little bit hesitant to actually rotate into Bitcoin, considering the fact that when looking at the chart versus gold, accounting for liquidity, we're at this big major point of resistance. Investors may look at that and prefer to rotate into assets like US stock or gold, depending on their relationship chart. And again, the fact that we haven't made a new high on this really indicates that this Bitcoin cycle has potentially mainly been driven by global liquidity expansion rather than Bitcoin's own outperformance and new capital inflows compared to assets like gold. Now, what we can also do is if we just look at where Bitcoin currently is on this price chart compared to where the high is, because we've already set 3 peaks at that point, so that's probably a pretty important point we need to be watching. We can see if we just grab here and bring it up, this gives us about 23.5% upside potential for this Bitcoin market rally to actually get to potentially a fair value high, something that we've already seen this cycle and where the double peak cycle was in the last Bitcoin price action cycle. And if we actually just draw on where 23% higher than the current price action would take us, we can see that that takes us to somewhere around $145,000. Now, if you watched our last video, which is Bitcoin being primed for a big move to the upside, that actually pointed towards a confluence point of resistance when looking at Fibonacci extension levels, and as well as the short-term hold at realized price bands. If you haven't watched that video, I definitely recommend checking it out. But just quickly, if we just look at that 23% point where Bitcoin could potentially extend towards, if we are to just reach that almost fair value level, if I just quickly draw the Fibonacci extension point here and just go back to the daily, we can see if we zoom in, this gives us a really interesting point to watch for Bitcoin to move higher. If we can maybe reach this, again, Fibonacci extension point at $145,000, which would point towards us giving this potential quadruple top when looking at the gold and liquidity chart of Bitcoin. So of course we haven't underperformed. If you can play the cycles well, then you'll have still done incredibly well. We still have over 600% returns versus the US dollar. And it's not like many people are buying groceries or anything using gold these days. So if you could play the cycles even remotely well, selling or taking profit at any point up here and scaling back in anywhere around here, then again, you'll have outperformed considerably. But for those buying and holding, it's worth checking out these ratio charts rather than just looking at Bitcoin through the lens of depreciating assets. And it's interesting to note the points of support and resistance where Bitcoin could potentially reach or retrace to if we had to face support and resistance when people who are looking at these ratio charts are potentially looking at the best risk reward opportunities where to rotate their capital into. Also, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released, and make sure to check out all the resources we discussed today as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, Bitcoin has so far had a fairly impressive bull market, as we can see by the percentage returns, and looks to be on the cusp of a potential euphoric phase, which could make all of the content of this video completely pointless if we see Bitcoin just massively rally to the upside, far extend beyond the ratio charts that we've seen, and potentially disprove the diminishing returns, especially here we have a lengthening cycle. Like we said, the fundamentals all look strong. I don't like to say this time is different. Until we see any actual evidence and facts that this time really is different, then we have to assume that we're going to follow something that we have done in the previous instances. What we can see is when comparing Bitcoin's relative performance, to other assets like gold or US tech stocks, we can see that we're actually little to no better than where we were in terms of raw purchasing power compared to our last peak or double peaks 4 years ago. When we also take into account the expansion of global liquidity or fiat currency debasement or inflation, we can see that we're actually well below where the USD or other fiat charts currently indicate we are in this cycle. And like I said, there's still plenty of time to go in this cycle, but one thing you need to do when you're doing your investing or analysis is just maybe look at these ratio charts, especially when looking at something like the Bitcoin versus gold or Bitcoin versus tech stocks. If you were looking at that compared to the just standard USD chart in the previous cycle, then you'd have seen at the double top, maybe at that point, that gave another indication, another point of confluence and confirmation that we'd actually seen a little bit of a double top, a dead cat bounce, rather than what we saw, this break into new highs, where people were then getting excited again that we're going to rally to 100K. If you look at the actual flow of capital from different industries, different sectors, rather than just looking at the debasement charts and inflationary charts that the fiat currencies show us, then it gives us a little bit more insight into potentially where the Bitcoin price action could go in the coming days, weeks, months, or even years. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto energy reports, API access, and more for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin potentially underperforming this cycle. Do you think that everything I've said here is redundant because we are making new highs versus the US dollar, and that's the main currency or the fiat currencies that we actually use in our day-to-day lives? Or do you think that Bitcoin really ideally should be outperforming other assets like gold and US tech stocks? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.